Hi everyone, so today we're going to be covering CBRE. So let's get right into it. It's gonna be a stock analysis video, so we're gonna cover how they actually make money, their earnings, where they are right now, and all of the above. So I'm gonna go ahead and share my screen and we will start. Now, CBRE, they generate revenue primarily acting as a service provider and advisor commercial real estate with major income streams from global workplace solutions, advisory services, and investment management. The company earns fees through property management, facility management, brokering property sales, leasing, and developing real estate for clients. Uh, Global Workplace Solution is CBRE's largest segment, over 25 billion in 2024, providing facilities management, project management, building operations. Keep in mind it's commercial. I want to emphasize that. I did reiterate it, but just to keep in mind, it is a commercial thing. Advisory service generates revenue through leasing service, connecting tenants and owners in capital markets, valuation services, and real estate investments. All right, a lot of the money is geographically, it's coming from the US, obviously, but they are global, so you should be aware. Now, when we take a look at their earnings, the earnings came out today, February 12th. They were quite good. The EPS was beating the estimate to $2.73, beating 266 and 17.7% increase. Revenue came in 11.8%, outperforming estimates of 11.15 billion. Net income was down 14.6 billion, primarily due to non-recurring items in the UK. Core EBITDA was up 19%, and these are just the other facilities, or the other segments of it. But the most important thing I think is assets under management (AUM) increased 9 billion for the full year. So that's great. Now, 2026 CBR management also issued an outlook for the upcoming year, forecasting 2026 core EPS in the range of $7.30 to $7.60, which implies roughly 70% growth at the midpoint. This growth is expected to be supported by sustained leasing momentum and expected demand. So I think it looks pretty good overall. They have been trading pretty well in general. Now, the next thing I want to take a look at is Simply Wall Street. Simply Wall Street, let me just put that in, is interesting graph, but regardless, they're going to be a little interesting here. You have currently 1.36 billion. The next 3 years, going to be 2.559. So, it's growing certainly slower. It's a more lethargic company. It is a real estate company. So they are going to grow slower, but it doesn't look that bad. The financial health of the company, it's exactly what I assume it would be. High debt. Here, debt levels, net debt to equity ratio is considered high. Reducing that, they would want it has been increasing significantly. Well, it's a real estate company, so I imagine that they're going to have a lot of debt on the balance sheet. It makes sense. Now, the next thing we're going to take a look at is my DCF. My DCF say it's 15% undervalued. Had a bit of a sell-off. Wall Street that was Wall Street. Historical growth is going to say that it is 26% undervalued. Probably, yeah, slightly undervalued. Tipranks is going to say the same thing. We're going to cover that in a second. But first of all, we need to check the net income. And the net income is pretty good, I would say, in general. It's decreased a little bit, but it's still net income positive at the very least. 2021, 1.8 billion, now 1.2 billion. So, like I said, has decreased in the past couple of years, but at least it is positive overall. The stock right now is at 136, 52-week low of 108, and a 52-week high of 174. It's pretty much close dead center. If you want it to be a little bit more on the safe side, wait closer to that 52-week low, I would say in general. And lastly, when we check Tipranks is not, they're saying actually that now is a good price. Strong buy, 6 buys, 38% upside, low of 180, an average of 188. Obviously, currently trading at 136, like I said. So, yeah, it certainly looks good. If you like real estate, keep in mind the difficulties with commercial real estate. They're saying it's a slow sector, so you do have to keep that in mind. But the financials look good just to peer and do a stock analysis video. But we're going to cover it in future quarters. All right, thank you, everyone.